Hello, this is Russell Collins. In this podcast, I want to talk to you about how much insurance a person should own. The number one purpose of the initial meeting with somebody is to build a relationship, and secondarily, its purpose is to gather information. In a risk insurance type meeting where a person may be coming to you for advice on their existing program, or perhaps have never owned insurance before, it's not unusual for them to ask the question, how much insurance do you think I should own? At that point, it's very important that you resist the temptation to start talking about sums insured or premiums, which is really the end result of building the relationship. Remember, people buy your advice first and your product last. The first part of the answer to that question should be a simple, an amount you can easily afford. Let me repeat that. If somebody says to you, how much insurance do you think I need? Then your response should be, without any hesitation, an amount you can easily afford. From my experience, this response will positively contribute towards building the relationship in two ways. First, it puts the person at ease because if you immediately start talking figures, their mind will start thinking costs rather than benefits, and that will dominate their thinking for the rest of the meeting. And secondly, and most importantly, it will help you eliminate competition from the outset. Now I hear you asking, how does that eliminate competition from the outset? Well, first of all, when people meet with you for the first time, they subconsciously have 4 questions that they want answered. They haven't thought about these 4 questions, they haven't written down on a piece of paper, but these are the 4. First of all, do I like you? Second, do I trust you? Third, are you competent? And fourth, and this is the most important, are you the sort of person that will put my best interests before your own? Now, believe me, that first part of your answer we go back to regarding an amount you can easily afford will go a long way towards answering question number 4 that I just mentioned there. Are you the sort of person that put my best interest before your own? Because that is something they will never forget from the initial meeting. In addition, when finances get tight somewhere down the road, you'll find the premiums on insurances that you recommended are not the first thing to get turfed. And when the opportunity presents itself in the next meeting for you to sit down and discuss recommendations and affordability, you'll have the opportunity to help them regarding their budget constraints. In other words, in that next meeting, if it becomes apparent to you that they have need for a lot more insurance than they can afford, you'll have to tailor your recommendations to their budget constraints. Again, a further opportunity for you to demonstrate that you are the sort of person who puts their best interests before your own. And if you indicate that in the SOA document wording, like something along the lines, based on your needs, this is what you require, but based on your budget constraints, this is what I'm recommending. Trust me, you will never ever have a compliance officer telling you that that person is underinsured. As an aside, I was able to achieve a closing rate of 9 out of 10 in the risk insurance area by eventually finding out what people could afford and then tailoring my recommendations to fit their budget constraints. But affordability was never ever discussed in the initial meeting. The second part of the answer to the initial question, how much insurance do you think I should own, will be covered in the next podcast.